G'day folks, welcome back to another update for the German DAX and the Japanese Nikkei. Now the DAX has risen since our last update and the Nikkei has continued to consolidate. Before we go any further, make sure you hit that like and subscribe button to support the channel. Looking at the outlook, as of today, February 11, recent US tariff announcements have significantly impacted both the German DAX and the Japanese Nikkei. In terms of the DAX experienced a 1.5% decline following the US imposition of a 25% tariff on imports from Canada and Mexico and a 10% levy on Chinese goods. Germany's export-driven economy, particularly its automotive sector, is vulnerable to potential US tariffs on European goods, which could further strain the DAX. The Nikkei closed nearly flat, reflecting investor caution amid US tariff threats. Japanese automakers, especially Nissan, face significant challenges due to their reliance on exports to the US, making them susceptible to new tariffs. So first looking at the DAX, we'll look at the long-term trends first. We've got the monthly, the weekly and the daily. And these moving averages on the price chart and the CCI are both in the description below. I've had some people ask me about where do I draw those. Those videos are in the description below should you wish to learn how to draw them yourself on your charting software. So on the monthly, the price is well above its moving averages, giving us a bullish trend, has been for a long time there. On the CCI, notice we had a bit of a pullback, and that was reflected by this pullback into that moving average range on the CCI. But currently we're still in a bullish mode on both the price and the CCI on the monthly. On the weekly, if I zoom in, we did actually have a Fibonacci retrace drawn. Now I'm going to redraw this. Let me just delete that. I'm going to redraw this because since then the price has gone higher. So what we do is, so long as that CCI remains lower than that point there, so if we move that to that high, you can see there that's still a slightly lower high than that previous high, that peak there. That's a bearish divergence because the price has made new highs. So we're going to increase all those levers, and we're going to draw a new Fibonacci retracement. And what we do on this portion here, we draw a Fibonacci retrace from high to that low, that previous low before that divergence started, which means we have to then readjust. Let me get rid of that. We have to then readjust this Fibonacci retrace from that target area. So that's that new 23.38%. It's risen ever so slightly. Now, we just keep doing that so long as the price keeps rising and the CCI remains lower, and we're going to consider that a bearish divergence. So that's on the weekly, just be mindful. We might see a pullback to that, at the very least to that area on the weekly. On the daily, now you'll notice here we had a slightly bearish divergence on the CCI. In fact, that's probably a bit high, but I'd consider that a bearish, and it pulled back. And currently we've got another bearish divergence from that peak down to that area there. That's a lower highs on the CCI versus higher highs on the price on the Japanese on the DAX. Sorry, I'm still talking about the DAX. Now it's reached that new peak, but we've got a declining CCI, so that's a bearish potential move on the downside slightly, or at the very least neutral within that very narrow moving average range on the CCI. Even though the price is above its moving averages, just be mindful we might see a pullback. Now to also support that claim, we look at the micro charts. So we go to the intraday chart, the 1 hour chart here, and we did have here a bearish divergence back here before our last video. You can see there I've drawn a Fibonacci, pulled back, hit that 23.38% level, broke in there, then it bounced out of there. More than 90% of the time it's going to hit this range. Sometimes it breaks right through to below that. So we can't really tell how far it's going to go, but you're just demonstrating how it can impact and retrace. Now we had another very minor CCI bearish divergence on the CCI there versus a double top on the price. These narrow ranges, by the way, just from my experience, these narrow ranges give a lot stronger retrace. You can see that fell. If you were to draw a Fibonacci in that range there, that fell to 100% retrace level. So I find these narrow divergence, these very narrow ones, give a lot stronger retrace than these longer term ones. So that was that one. And back here, currently, as I said, we've got a lower high on the CCI versus a higher high on the price. That also pulled back and hit its target area. Now currently, if I drew another from that point to that point, lower highs on the CCI, and that's a double top. That's still considered a bearish divergence in my book. So again, expect that to fall back, and that'll come down to a similar place because that's not much different to that previous one. So if I drew a Fibonacci between that low, and I'll do it just for your reference, between that high and that low, that's where the new target area will be. If I was to draw a target area, I'm expecting it to reach, at the minimum, that level. Also, just notice as well, in terms of trading, I don't trade these divergences. I'll use them as a potential area to exit the trade. So if I'm going long during this period and I start seeing a bearish divergence on any time frame, then I might take my profits off the table. Now, you might lose some profitability because in this case, for example, the price has still still gone higher. But again, just to be careful and be very conservative with your trades, you can take your money off the table if you're making money on it. So the way you trade this, so long as the daily is bullish, so if I go back to, let's go back to, what's that, January the 6th. So going back to this area, just demonstrate how to trade for those new to the channel. So back here, January 6th, that was your first entry back there. Now you'll notice here, as long as the daily is, if you're trading on the hourly, as long as the daily is bullish, you take long trades, and that would have been during that little period there, this little peak here. So you would have taken that long trade there. Again, let me just zoom in. So what you do is, during that period is bullish, and you take a long trade, enter when the CCI breaks the moving average, and also the price breaks above the moving average. So you could have entered on one of those little candles. Let's take it to the one that's really visible. Close with that candle on the hourly, and you close it out when the CCI breaks into the moving average range. So you would have closed it out on that candle there. In the 1 hour time frame, in 15 hours of trade, that would have given you a 1.05% gain of a trade. You avoid going long, obviously, because the CCI is breaking below. And now notice here, we haven't really seen a bearish divergence yet, because in that period here, the CCI has dropped, and so has the price. So you don't see a divergence until you see this peak on the CCI pull back like it was there, versus the price made new highs. So that's the first line of sight you see as a bearish divergence. So as soon as you start seeing that, that's where you start seeing that decline. That's where you be careful of taking long trades. Now in this case, you could have taken a long trade there when it broke above the CCI there, and you would have taken that entry there, and you would have closed it out when the CCI broke into that on the close of that candle. So that would have given you a 0.49% gain in 7 hours of trade, and so on. Where we are today, if I go into the current price and CCI, let's just go. Okay, so let's go back to where we are today. Taking into consideration the bearish divergence, you would have gone short beginning on the 2nd of February. So if you go back to the 2nd of February, you would have taken short entries. Now, a couple of these were false breaks. Them's the breaks. This is not 100% perfect strategy, but you would have taken a short trade on that one, gone short there, and closed it out when the CCI broke into the moving average range, which would have been, this one would have given you a negative result as well. So again, just cautiously, some of these aren't perfect, but again, just avoid, if you see a divergence, I would usually avoid trading, because that can give you funny results. Like in this case, that would have been a lost trade. So again, during this period, no short trade should have been taken, or could have been taken. This one possibly, but again, notice there you're in a neutral position on the daily, so you wouldn't have taken that one. Now, if this breaks down on the daily to a bearish below the moving average, this one's a fresh breakout on the downside. You could possibly take that, but again, and that could help. And that also coincides with the pullback and this bearish divergence. So that's where you would take a short entry, and you would probably put a target, or if you want to wait until the CCI breaks into the moving average range, that's where you would close out the trade if you're watching it. Now looking at the Nikkei, we're on the monthly, it's broken down below the moving average range, giving us a bearish outlook. And that's in a continuation of this bearish divergence. And that was the start of it there. And it actually pulled back quite strongly during that month. You can see that wick there broke very strongly down. But since then, it's been consolidating. But we're still bearish on the CCI, even though the price is above the moving average. So I would avoid going long. At this point, more probability on going short at the moment on the monthly. On the weekly, we did have this long-term bearish divergence, a couple of them. There was the first one was up until that point, lower highs on the CCI versus higher highs on the price. That one had a very minor retrace. And this second one as well is continued. That's got a lot stronger retrace. You can see there I've drawn a target, and it's already bounced out of that range. So that's on the weekly. on the daily. It's been stuck in this range for some time now, and it's still consolidating in this range. Been fluctuating above and below the moving average band on the daily, so very minimal trades could be taken here, but yeah, just wait for this to break out of this consolidation phase. If we go to the intraday charts, looking at the 1 hour chart, for instance, now you can see here since our last update, it's been consolidating, but it's made new lows on the price, but higher lows on the CCI, giving us a bullish divergence. And what that means is, if I was to draw a Fibonacci to that recent high before the divergence started, you can see there it's already bounced on that 1 hour. It's already bounced into that 23-38% minimum range. So if I was to draw a target area, it's already hit that 23-38%, just above it, and it's pulling back in that range again. So it's already hit that range. That's why I don't trade these, because sometimes these pullbacks and retracements give you very little time to get meaningful profit. So just be cautious of that. But at the moment, it's consolidating in that on that 1 hour range. Notice the CCI on the daily is still somewhat bearish, and so is the price on the price CCI moving, and the price and the CCI moving averages are both bearish. So you possibly could take short trades from here. But again, watch closely for exit levels once they start breaking into the moving average range of the CCI. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.